Accrual journals are processed to record transactions relating to revenue or expenditure in the general ledger prior to receiving formal documentation on that transaction and prior to cash changing hands. The objective of accruals is really to recognize income and expenses in the correct period when they were earned or incurred. Sometimes accountants refer to this as the matching principle. So waiting for supporting documentation could result in revenue and expenses being recorded in the wrong financial period. What accrual accounting does is it allows us to record revenue and expenses in the correct period, even if the documentation hasn't been received and even if cash hasn't changed hands. Let's do an example. MacMart has a 31 December year end. On the 2nd of January of the new year, the financial manager starts preparing the general ledger in order to draft the annual financial statements. The company has, however, not received the telephone bill for December. Over the previous financial year, the telephone bill was equivalent to $50,000 per month. What would the journal entry process be to record this accrual regarding the telephone bill? It would be a debit, let's call it telephone bill accrual, and that's an expense in the income statement of $50,000, and then there would be a credit for accruals in the balance sheet, almost like a current liability of $50,000 as well. If you had to see the journal reflected in the T account and GL, you'd see a debit of $50,000 on the expenses or telephone bill T account and a credit of $50,000 in the accruals or current liability T account. In the event that come the end of January, the telephone bill for December was received and came to $50,000, MacMart would process the following journal. They would debit the accruals or current liability in the balance sheet of $50,000, and because they've paid it, they would credit the bank and cash $50,000 as well. The effect of this journal would be to show the telephone expense in the correct financial year it was incurred, and the accrual current liability will be reduced to zero when the telephone company is paid its money.